Hello and welcome to another Daily Dose of Insights powered by Container Exchange. My name is Christian, and every other day I bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Wednesday, so as every Wednesday we take a quick look at the markets. We've got a few graphs and figures here to help you make better understand the markets that we're operating in and the longer trends at play. Let me quickly share my screen to give you a little bit more guidance on what I'm talking about. We start with our exchange sentiment index or container sentiment index, where on an ongoing basis we ask market participants whether they expect container prices to increase, stay stable, or decrease in the weeks to come. And as you can see here, since about July, after summer or towards the end of summer, we had a significant increase in optimism on that metric. So in general, the market really expected container prices to increase. That took a dive 2-3 weeks ago, but has now rebounded sharply just this week. For me, interesting here is that increase in volatility. It was relatively stable here towards the end of August and the beginning of September. And now suddenly there's much more uncertainty in the market in terms of where container prices will go in the weeks to come. Speaking of container prices developing over time, let's take a quick look actually at the market for 40-foot high cube cargo-worthy containers in Moscow and Shanghai. And this is a screenshot of our Insights product, which you have access to on Container Exchange. The reason I'm showing these particular two cities is because Bloomberg just broke a story based on one of our analytical pieces, where we looked at the market between Russia and China, and we saw that there is a significant imbalance, of course, on that container trade because Russia is exporting mostly energy and raw materials to China, whereas the imports from China to Russia are particularly consumer goods, so container-bound cargo. And what this leads to is hundreds of thousands of containers piling up in Russia, and conversely, driving the price for 40-foot high cube cargo-worthy, so second-hand containers, down particularly. So what this means is that in August here, this is the last data point actually that I chose. You have more access to more up-to-date data if you log into Insights. We had a market price actually of about $600 in Moscow, whereas in Shanghai it was almost 3 times that. And you can see here that since about the beginning of the Ukraine war or the conflict in Ukraine, the delta between also overall the price trend, of course, has been negative in both Shanghai and Moscow due to the structural oversupply of containers in the market. But here now this gap is widening, and market prices in Moscow are continuing to fall, while container prices in Shanghai are sort of stable since the end of Q1 this year. Right now, if we sort of couple this with freight rates and also leasing charges, of course, data that we also have on exchange, you see that it's still profitable for container traders to buy containers in Shanghai, offer them for one-way use into Russia, and then selling them off on the secondary market. So there is still a positive price delta to be made because the pickup charges are so high on that one-way move. But of course, it's becoming very challenging on that trade to find additional container equipment to move into Russia, just because the trade is so imbalanced. And that's also one of the reasons why we see more and more newcomers on the vessel market applying into that trade, buying tonnage, buying vessels to offer that trade, especially the Russia-bound cargo, because otherwise there's just very limited interest in supplying on that route. Yeah, so that's very interesting. Something that's going on in the press, and we see that also here in the data. And then last but not least, let's take a quick look at the past 7 days. What has moved here on the market? This again, or still, 40-foot high cube cargo-worthy containers, 7-day price change by regions. And you can see actually, this is now a very diverse picture. Over the course of 2023, we were very used to seeing all regions in negative territory. But now this becomes more interesting again for container traders that operate worldwide to sort of steer their equipment a little bit more let's say intelligently, or at least based on data. We see prices in Africa, Southern Africa, East Africa actually increasing 3, 4, 5% week over week. We also see the same here in Southeast Asia, whereas on the other end of the spectrum, we see Middle East and IC really suffering still on a week-on-week basis here in terms of price developments. So on exchange, in Insights, of course, you can make use of all of that data to make better decisions and to make more money on container trading, essentially. Cool. That's it from me for today. Thanks a lot for tuning in. I hope you found this useful and interesting. Have a fantastic rest of the week, and see you all on Friday. Take care.